Hi, Edward Moraz here, and this is part one of a multi-part educational series for you. And it's how to make money in the stock market even when it's in the dumps. And let's go ahead and get started. Okay, it's important to remember that not all stocks go up or down together. Um, Within the different economic sectors and throughout the economic sectors in the stock market, when some go down, others go up. Because when people don't buy this, they buy more of that. Or when they buy more of this, they buy less of that and whatnot. It goes up and down all over the place, and it's like a teeter-totter almost. Um, like for example, take these gas prices. The gas prices are going crazy right now, and people are buying less fancy cars and less high-powered cars and performance cars and SUVs and Hummers are down like 60% in sales right now. It's crazy, but at the same time, hybrids and small scooters and even bicycles are going way up. So that's how it works. Um, and Even though the market is going down right now, um, don't be scared. It's no big deal. That happens. This is a huge fall going on at this exact moment when I'm writing it. Just a little while ago that the market went down 700 points, which is huge. But it went back up like what was it, 462 points like the very next day and whatnot. So it's kind of crazy right now, but it's even still within it, even though it's crazy, it's still acting normal if you can believe that. We just have to look at the graphs and get a long-term perspective on the thing. Um, so just remember this. Remember the phrase, buy low, sell high. And right now, a lot of the stocks are getting low. And because of that, people are getting scared and thinking that the Great Depression is going to come along, and I can tell you that ain't going to happen. That ain't going to happen. This is just some stock market turbulence, and given some help and whatnot and time, things are going to get back to normal. They always do. Did you know that in the stock market, in every single 10-year period of the stock market, it has gone up 100% of the time. 100% of the time, it has made money in any 10-year period. And I'm not saying, you need to hold on to stocks for 10 years or anything. I'm just, breaking it down into chunks for you. Some stocks you do want to hold on for 10 years. Some you want to hold on, for many decades. But you know what? A ton of stocks, you're not going to be holding it on for nearly that long at all. I'm just giving you a history of it here. So now that stocks are going down, it's actually one of the best times to buy the stocks because they're going to be going back up. And a lot of people are going to be saying, well, what about AIG? That big insurance company that totally tanked. Yeah, that did fall, but if you were paying attention, it wasn't just some like quick thing that the media caught on to or anything like that. If you were actually paying attention and looking at the charts, that fall was slow and happening for a long time. It was like a year-long process. So it was absolutely no surprise to any stock investor that was actually paying attention to this kind of stuff. And you just got to pick the right company, and that's exactly what we're teaching you to do at investorrules.com. Just learn the numbers, learn the techniques. It's just numbers and tracking, folks. Just get the charts and look and know what to look for. Get some experience. We teach you all that. It's really no big deal. And the economics will turn around, and so will stock. And if you buy at the right time, which we're trying to get you to do and show you how to do it, then your money's going to go way up when the economics go up. All right, next slide. Don't forget that you can even make money when stocks go down because the stocks go down. Now, this is sort of an advanced technique that sophisticated investors need to know, and this is actually exactly our goal with InvestorRules.com is to turn people into sophisticated investors, because sophisticated investors can make money when stocks go up, of course, and when stocks go down. It doesn't matter what conditions are of the stock market, you can make money from it. You just have to know how to do it, and a sophisticated investor can do it, and that's what we're going to teach you to be. But right now, for this series of lessons, we're not going to be getting into that yet. We're getting into something a bit more fundamental. But I probably piqued your curiosity about the stocks going down thing. So if you want to look into it a little bit more, it's called the shorting strategy. That's the common one that a lot of people use, but I don't necessarily suggest you actually start with that. But feel free to look it up. There's a lot of information about that on investrules.com, and just go to stockinvestingprofits.com. You can get a free report there if you haven't gotten it already. If you're on our newsletter list, or you're a member of our site, and you don't have the report I'm talking about, just let us know. We'll get it to you. But we'll be getting into that. And InvestRules.com members are going to be way ahead of the game on this kind of stuff. But let's stick with some more fundamentals. This fundamental that I'm about to teach you is done by some of the best stock investors in the world. I'm talking like Warren Buffett people here. Okay, so step one. Just go to your favorite stock screener. I personally like Yahoo Financial Stock Screener a lot. It's free. It's just right there on the internet. I use a few different ones, but this one, it's really quick and easy to get to. I would give you the URL, but they seem to change it every once in a while. It's kind of weird. I don't know why they do that. So just go to yahoo.com and just search for Stock Screener or Yahoo Financial Stock Screener, and it'll probably be the first search result, just because it's a Yahoo thing, and I bet they do that for themselves. But it's really easy to get to. You can't miss it. And that's what I'll be using for this example. Okay, so when you get there, there are three things you're going to want to search for. All right, the first one is going to be a market cap of $500 million. All right, so I think the minimum defaults to 100 million, which is fine, but just set the maximum to $500 million. And then after that, you want to put the PE ratio to 0 to 15. Not all stock screeners say PE ratio. They probably write out the whole thing price to earnings ratio. But just put it at 0 to $15. And then after that, you want to specify a share price of 0 to $10. And then just click search and you'll get a handful of stuff. So here's the three things that you want to search for. There's a note right there. I'm sure you can see. I personally prefer a share price of $5 to $15. When I do this, that's the number I use for that. Some people don't like to, just because they don't want to pay up to $15 for a stock for this technique. But I like it because stocks that those numbers find you generally aren't yet on the radar of major brokerage firms, and it just means that we're a little bit ahead of the game here. These numbers here, these are some very important numbers. The market cap, the PE ratio, and the share price. Technically speaking, a lot of people actually don't even want you to have these numbers, because these find what are called value stocks, quote-unquote value stocks. And there's a lot of brokerage firms that use these exact numbers to find stock picks to sell to other people for a lot of money. But you have them right here. We use them. I have a small twist if you'd like to go ahead, but write them down and go to the stock screener. That's your homework right now, is to go to the stock screener and find these. Go ahead and do that. It'll make you some money. Okay, so when you put in those numbers and you click search, it's going to come up with a handful of stocks. And that's not the end of it, okay? There's more things to do. But the stocks that does find you, this is like the tip of the iceberg. These are a lot of the really good ones that are still performing well, given the current conditions of the markets. Remember, for this technique, we're not doing the whole making money when stocks go down thing. This is the fundamental Warren Buffett technique of value stocks, of finding the stocks that are doing well in a bad economy. Okay, so these are really good ones here. But it doesn't stop there. There are 6 qualifications that each of these stocks must meet before you even think about investing a single cent in them. Okay, so in the next video, in the next lesson, step 2, we're going to be going over these 6 qualifications one by one, and I'll be showing you exactly what to do and what they mean and everything. It's not going to be hard. It's just you're just going to have to click on each stock and go to the statistics screen and look at some numbers. And that's all stock investing is. For the most part, it's just tracking in numbers, and sometimes it takes some experience and some practice, and there is a bit of an art side to it. I ain't gonna lie to you. There is some art and feelings to it, but that comes so easily when you have the right numbers. You just gotta have the right numbers, know how to look at the charts, and this is exactly what we teach people to do at investorrules.com. If you're one of our members and stuff, you're way ahead of the curve. You're going to be able to make money no matter what, because you'll have the right rules. You'll know when to get out. You'll know when to get in. Stuff like that. All right. Okay. So just watch for part 2. It's in the works. It'll probably come out real soon, within a day or two of you getting this. So just watch out for that. This is Edward Moraz with InvestorRules.com. Happy investing. I'll talk to you later. Bye-bye.